Hi, this is Dawson Schmidt, head of market content here at Trader PhD. I just wanted to take the time to kind of dive into what's going on with the wheat market in terms of, the ongoing drought in the plains. This is a topic that's really been garnering a lot of attention from the media, from different analysts of just the ongoing drought issues that is kind of taking the forefront of, what's going on with price action that we've seen with futures rising to fresh highs in both the SRW wheat and HRW wheat contracts. And just wanted to blow into a little bit of perspective here from this topic that we've kind of just been discussing for about probably 4 weeks now at this point. So kind of wanting to kick off things is just, the amount of drought coverage that we've seen with winter wheat areas kind of been reflected in the ag drought monitor that is published each week. And so most recently, if you look at winter wheat areas under drought, we can see that 70% of US winter wheat areas are experiencing some level of drought, D1 to D4, specifically in terms of total coverage. And you can see here that, a lot of these areas that are experiencing that are the HRW wheat areas, specifically in Kansas. If you kind of look at that on a national basis, you can see that, from December or early December, late November, all the way until now, we've just seen climbing drought coverage, specifically for winter wheat areas. A lot of that is because, we've seen a bunch of soil moisture deficits in a lot of those hard render winter wheat areas of Kansas, of Nebraska, of Oklahoma. Parts of Montana and Washington for winter wheat areas have also been under a little bit of stress. You can see that we got a little bit of some rains up in Montana, so that we've seen a little bit of better conditions, or at least better moisture conditions, for those areas. But how did we get here? And I think this graphic from agweather.com that's run by Eric Snodgrass with Nutrien, it really kind of paints the picture. Over the last 2 months is what this graphic is showing of just precipitation percentages. And you can see a large swath of these HRW wheat areas have actually been, missing out on a lot of critical rains as winter wheat areas have come out of dormancy. We've seen moisture be pretty good throughout parts of SRW wheat country in like Illinois, Indiana, Ohio. Some of that is kind of more recent, but we've seen largely a lot of these conditions deteriorating in the Plains region, and that's highlighted here in this chart, just showing that we've seen a lot of missed rainfall for those areas. And so kind of put things in a numbers perspective, only 30% of the U.S. winter wheat crop is in good to excellent conditions. On a historical basis, we've seen that, this is some of the lowest that we've seen in, the last 2 decades. The lowest since 2000 was, 2023. Right behind that was 2022. And so we're kind of kicking along those levels most recently to where, this wheat crop is off to a pretty bad start. And again, you can kind of see where a lot of those issues are. A lot of those issues are centered in the Plains region, particularly in Texas, Oklahoma, Kansas, Nebraska, Colorado, as well is one place that's kind of been seeing a little bit of some issues. Most recently, Missouri too saw a little bit of a step back in conditions on the USDA's crop progress report. And so I know I'm flying through these, but a lot of this is to say, is we've continually seen a lot of these areas kind of show some of these problems pretty early on in the year. And more so being, we were kind of watching what was going on in just the wheat price action between the HRW wheat and SRW wheat. And that was kind of already showing up in the spread. And so we saw from early March through now, we saw a big jump up in the spread between Kansas City futures and Chicago wheat futures. So Kansas City wheat futures are currently holding a large premium over Chicago, and typically that is showing that the market is expecting a lot more issues with that HRW wheat crop. And so that's just something that we've kind of observed over the past couple of months, of showing that, hey, this is more of a east versus or a west versus east issue, or HRW versus SRW issue, and that's being highlighted in the market price action as well. Now there are and I almost debated not even showing this, but over the next 7 days, there is supposed to be some precipitation in some of these HRW wheat areas that have been really missing out on it. There was some scattered storms that happened just this last week in some of those critical areas. But I mean, the question is, how much does it even matter? We're talking about these low conditions for, these last few weeks since the USDA started reporting them. But we've already seen these soil moisture deficits ongoing for a while, unable to get moisture relief. So it all comes back to, what does this have to do with the U.S. wheat balance sheet? Now, the USDA won't actually put out its forecast for the 2026-27 crop until the May WASDE report, which is in about a couple of weeks. But, it's probably not too early to start kind of trying to think about what the USDA might be looking at come when that report comes out, and this might be a lot of what the market is potentially looking at for what the USDA can come out with. The whole buy the rumor, sell the fact situation. We don't necessarily have a fundamental number yet with what's going on with what the USDA is going to publish. So the market is trying to figure out something as to what the USDA could print or what could just be a reality in general. So we kind of put together a little bit of a scenario of what could be going on with this winter wheat crop. And so with this 2026-27 marketing year, we are expected to plant 43.8 million acres as of what the USDA said in the prospective plantings report. That's the lowest since 1919. So we've been trending lower on our wheat acreage for years now at this point, and now we're expected to plant the lowest in over a century. And so we're really relying a lot on yields to kind of keep us up production wise, or even lower demand to kind of ration what we do have here in the United States. And a lot of what the decrease was over the last decade or so in terms of wheat acreage here in the US is just priced competitively on the global stage. We're not as competitive as, say, Europe or Russia or even Argentina at this point, after they've produced more wheat acres and have actually managed to capture a little bit more market share on the export stage. But going back to this balance sheet is, we're expected to, as of right now, plant 43.8 million acres. But it all also comes down to, how much of these acres are we going to actually harvest? And so not only does USDA forecast harvested or planted acres, they also forecast harvested acres. And so kind of looking at what we could see with what the USDA comes out with if they are aggressive on their production cuts here to start the May WASDE or the new crop balance sheets, is that we could see about a 300 million bushel decline year over year in U.S. wheat production. This is all wheat production. Looking at, even with a step back in supplies, we can always expect a little bit of a step back in demand. And so we cut a little bit on the export side of things too. So, I mean, we were expected to export about 900 million bushels of wheat this year, according to the USDA. We could see a little bit of a step back, even sub 800 million bushels, and kind of get back down to those 52-year lows that we were already trending towards back in the 2023 and 24 marketing year, just because of availability of wheat supplies and our less price competitiveness on the global stage. And already, if a lot of that was to be realized, we'd be looking at an ending stocks number of about 800 million bushels as our carryout for this upcoming season. And with that, that would also draw down our stocks to use ratio to about 43%. I think that's a little bit on the higher side of what could actually be realized moving throughout this next marketing year. So, I mean, we could almost be looking at a 40% stocks to use ratio coming up here. So all this to say is that, the market is kind of seeming like it's doing a little bit of some price rationing in the expectation of lower domestic wheat supplies on both a carryout level and a stocks to use ratio level, to where we're kind of shifting from this we're transitioning from growing supplies relative to demand over the past few years to now declining supplies relative to demand. So all this to say is that, the market just seems to really be focusing on the exuberance of the expectation of a lower wheat crop this year. And so we're not fully going to get a little bit of an idea until kind of the USDA publishes that May WASDE, because that's going to be the first glimpse of seeing how aggressive they want to be in terms of yield expectations, in terms of abandonment rates, and we can kind of see maybe that happen in real time as we move closer to that date. But just wanted to highlight that a little bit and kind of show the ongoing, what we've been watching and kind of a little bit of an expectation of what we could see here in the next couple of weeks.